Home Show, giving you what you want and welcome to the Home Show. Satisfaction guaranteed. Welcome to the Home Show. Loyal to your business and family. Welcome to the Home Show.
Good afternoon. Good afternoon. You know who it is. It's your man, Robert Lewis, LendToTexas.com, in association with Open Mortgage. How y'all doing? I'm good. Thanks for asking. Hey, want to talk to you today about buying your home the right way as it pertains to the mortgage side. Now, I'm going to throw this out here. Don't get upset at me if you bought your home already and you hear about what I'm about to tell you about. It's not my fault. I didn't know you. Get at me. We might be able to refinance and see if we can help you out. What I'm talking about today are, you ready? It's called a pregnant pause. Let me stop clowning. Mortgage credit certificates. MCC. You down with MCC? Yeah, you know me. If you did not hear or know about the mortgage credit certificates when you were buying your home, all joking aside, I really apologize, and I'm going to apologize to you for that mortgage professional that did not expose you to this. What is a mortgage credit certificate, you might ask? And I'm glad you asked that question. It's simply something that the government allows certain people, if you make certain monies, if you fall within a certain income bracket, and there's a couple of extra loopholes for special people. And what the credit allows you to do is take up to 40% of the mortgage interest that you already are allowed to use as a mortgage deduction, if you will, and take that front end amount, that 40% of the interest, and use it as a tax credit. So tax credits are different than lessening or shrinking the amount of money that you are exposed to taxes. That's what mortgage interest typically does. It lessens your tax exposure, right? It shrinks the amount, the dollar amount that you're exposed to the tax percentage or the tax liability, if that makes sense. However, a tax credit, if you have kids and things of that nature, a tax credit is a dollar for dollar credit. So for those of you out there that have been getting monies back, this is an extra $2,000 or up to $2,000 that you could use for the life of the loan, as long as there's interest there for you to deduct. Now, the interest declines as you pay the balance off, but for a good 15, 17 years, you can write off or get back up to $2,000 if your mortgage scenario allows. Let's get into some numbers. Let me quit talking. Let's see here. So as you see on the screen, got a little spreadsheet here that we created, and we just want to kind of go through some stuff. So today is December the 2nd, 2016. So you guys know I'm not pulling a fugazi. This is live, baby. We're full in effect. So we have Mr. Joe and Mary Dell. They live at 123 Anyplace, Texas. And this is a scenario that I did earlier today. 3.875% interest rate, $150,000 loan amount, 30-year amortization, 30-year term, and the mortgage credit certificate in this example is one that will allow you to receive up to 40% or use up to 40% of that mortgage interest that I talk about. So let me hop back over here. Everybody following me? So like I was saying, as you can see over here right next to me, right here, those are the scenarios that we're using. So as you can see, that's a middle of the road, Joe Blow, Mary, and Joe Doe scenario, $150,000, 3.875% in interest. So as we go on, I'm going to show you the power of this mortgage credit certificate. So I want to look at the impact. Boom. As you can see, the power of the mortgage credit certificate, or what we like to call it, the MCC tax credit. It's like money in the bank. Okay. So a couple of things we want to point out. The MCC are not mortgages. These are not mortgages. They are tax credits that effectively put extra cash in your pocket each month so that you can more easily afford a house payment. That means fewer tax dollars can be withheld from your regular paycheck, increasing your take-home pay. So let me hop back over here real quick. What are you talking about, Robert? Well, with these MCC credits, as you'll see in the example, I can potentially, hold on, I got an echo. I can potentially take up to $167 a month and take a W-4 withholding statement to my HR department and adjust the withholdings and receive up to $167 a month in my paycheck. That's how you could get a raise without doing anything extra on your job. And that $167.66 adds up over a 12-month period to be $2,000. That's the 40%. That's one way you could do it. You could get that $2,000 credit monthly in your income or in your check, if you will, as you go throughout the year. That's one method. Or another method you could look at is as follows. You can just wait until the end of the year and add that tax credit to your taxes. You'll talk to your tax preparer, let them know that you have a mortgage credit certificate, and they'll know what forms to fill out. But as you can see right here, this is just, an example of that, what I've already went over, explaining to you what an MCC is, and it is good for the life of your loan as long as you live in the home. But here's the example that we had earlier. 30-year fixed, 30-year amortization, $150,000 loan amount, 3.875% interest, okay? And the annual interest paid in the first year on this scenario would be $5,764.90. Of that, 40% of that, okay, actually is probably going to exceed $2,000. Well, in this case, let me look real quick. 5,764.90 times 0.4. Yeah, so the actual amount is $2,300, which is, 40% of this number is about $2,300. But once again, the maximum allowed is only $2,000. So as you can see, you take this 2,000 divided by 12, and I said 167. I apologize. It's 166.67. That would be the effective monthly tax credit based on calculated annual tax credit. That's this information here. But as you can see here to the right, the projected cash savings over a 5-year period, okay, would be $10,000. Projected cash savings over a 10-year period, 20 grand, okay? So you can see the power of these things that we call the mortgage credit certificate. Now the thing is this, you would have to have had to get the MCC credit when you did your loan initially. That's the bad part of things. So if you already have a mortgage, you can't come back on and add it. That's why I was saying don't get mad at me. But, from an underwriting standpoint, let's look at the impact. And if you can see right here below me, the mortgage credit certificate calculation worksheet. Okay, so we got a 30-year amortization, $150,000, 3.875%. The first year, that's the interest. 40% of that, $2,000 that I could get as a tax credit. And then when we're underwriting, right? When I'm taking your loan through the process, sometimes your debt to income ratio, DTI, might be a little high. Well, there's ways to get around that. And for the loan professionals that aren't out there that don't know what I'm talking about, hit me up in the inbox, call me. I'm hiring. I'm looking for some good LOs, because if you don't know this, you're missing out on money. You need to come get with me. I'm just joking. I feel good. It's Friday. Can I joke? Can I show the teeth? Let me quit joking. Let me calm down. Focus, Robert. Woosah. Okay, I'm back. So we could potentially use that projected savings to help you qualify for a loan if your debt to income ratio is a little high. So I just threw one of my trade ninja secrets out there for anybody who might be listening that's in the business. Once again, if you want some more information on how to get that done, give me a call. But as you can see, for $700 up front, 7 might be 8, just depends, because there's a cost for the credit. But you can see you'll recoup those monies back within the first year. Everybody that I've put on this loves it, right? Loves it. It's one of the best kept secrets in this business that most people on my side of the desk that are supposed to know what's going on, they don't. And as a result, if you're not with the right lending professional, you can be missing out. So I digress. Robert Lewis, Lend to Texas, in association with Open Mortgage. Hey, I tell you all the time, right? Who are you with? It doesn't matter if you can go to a local office and sit down across from someone if they don't know if their knowledge of the business is not on par. As you can see, it can cost you. So here's the deal. I love veterans. I love people that have served the country. And if that's you, or even if you served in a reserve capacity for 6 years or more, and you say, hey, Robert, I want to know more about this MCC credit thing. Today's your lucky day. I want to talk to you, right? I'm looking for you. So if that's you, if you're in the process of buying a home right now, hey, doesn't hurt to get a second opinion, somebody to look at your situation to see if this is applicable, right? If you're someone that has purchased a home before, okay, because one key thing that I didn't mention, in most cases, you have to be a first-time home buyer. And the definition simply is you have not had ownership interest in a property in the previous 3 years, okay? But once again, I don't want you to count yourself out. Get with me. Leave me a message. Leave some comments, right? Inbox me. If you're watching on YouTube, leave a comment. My information is out here. My website, Lend, L-E-N-D, the number 2, TX.com. You can get to me there. Reach out to me. Don't assume that you don't qualify. If you're in process right now to buy a home, get a second opinion. If you're thinking about buying, get with a qualified lender, someone you know, like, and trust, so that you have all the information before you when you make your decision and you don't miss out on something like this. Because in my opinion, there's no reason not to have this credit if you can qualify for it. Would you agree? Me too. So, hey, my time is up. I thank you for yours. You guys have a great weekend. Be safe. Let grace abound. All right, we're in perilous times, and just move with wisdom. I'll just put that out there to you. I don't want to preach to you. So until the next time, it's your resident mortgage lender, Robert Lewis, NMLS, license number 180100. And yes, we are an equal opportunity credit lender. Peace.
Satisfaction guaranteed. Welcome to the home show. Loyal to your business and family. Welcome to the home show.